Good day, ladies and gentlemen, and welcome to Apex Frozen Foods Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Chaudhary Kuruturi, Executive Director. Thank you, and over to you, sir.
Yeah, thank you. Good afternoon, everyone, and thank you for joining us on the investor call for the first quarter of financial year 2023. With us on the call today is Mr. Durga Prasad from our finance team and Stellar IR Advisors, our investor relationship advisor. We have uploaded the investor presentation on the website of the stock exchanges, and we hope you have had a chance to go through it. As we have been updating you over the past few quarters, Apex was done with its capex cycle, and with the 29,240 metric tons of own capacity, we are ready for the next phase of growth. The COVID pandemic, followed by the equipment crisis regarding the logistics container issues, and then the war in Ukraine had a mellowing effect on our business. We are happy to report that most of these challenges are now seem to be behind us. In the first quarter of this year, we witnessed a revenue growth backed by growth in both volume and realization. The total shrimp sales in Q1 FY23 grew by 16% year on year to 3,761 metric tons, and the average realization stood at rupees 813 per kilo, which was higher by 20% year on year, backed by improved product mix mainly, and firm shrimp prices globally, and of course the depreciating Indian rupee, which had helped us to a certain extent also. The share of our higher value ready-to-eat products increased to 25% of the Q1 FY23 sales, as against almost 21% of Q1 FY22 sales. The two main factors that helped us in this performance was our ability to take care of the container shortage which was prevailing last year, and we had ensured proper contracts with the shipping lines in advance, which we have already emphasized in our earlier quarterly Concall. This is mainly to ensure that we don't have any logistical challenges to our growth, and of course a consistent supply of the raw material during the past quarter. However, in the present quarter, of course, there are some supply-related challenges, as some of the producers had to make some prior premature distress harvests, and also some rains which have been affecting to a certain extent. So there are certain supply challenges in the current quarter and the current period. However, on the demand side, things seem to be fairly stable, and with the festive season approaching in the latter half of the current quarter and part of the third quarter, we are hopeful of improved sales, subject to, of course, supply conditions which I just mentioned. Let me briefly touch upon some of our key markets and how they are faring so far. The biggest market of our products remains the USA, followed by the European Union. As you are aware, the entire global economy is facing inflationary pressures, and during these times when prices of proteins do go up, farm-raised proteins provide a good alternate. During COVID, we saw an increase in our ready-to-cook and ready-to-eat products, signaling a small shift in the market. As the COVID-related restrictions were removed, our food service market, restaurant chain business also started improving. But along with this, we also saw an increase for our ready-to-eat products, which primarily go to the retail segment. This indicates that the markets, the retail markets continue to grow for us in a consistent manner with regard to the USA business. On the EU front, we continue to see improvement on ground in terms of demand for our products. We are seeing good traction of our baseline products. The RTE products that were in the process of getting regulatory certification is still ongoing. It is currently ongoing, so hopefully it will be completed by the end of Q2 or by early Q3, where we hope that the EU market also will be open to our company, and it is going to coincide with our expansion on the ready-to-eat capacity too. So we definitely hope the regulatory process will get completed mostly by the Q3 of the current financial year. These two markets continue to remain the key for us, and while we try and capitalize on any opportunistic demand from markets like China and other Asian countries, our key focus, however, remains with the US and EU markets, where we believe we still have tremendous potential, both in terms of volume growth, but more importantly in ensuring that our product mix improves in this region. In terms of operational performance, our shrimp sales saw a volume growth of about 16% year-on-year and 55% quarter-on-quarter to 3,761 metric tons. This is by far one of our best quarters. The share of higher margin ready-to-eat products increased to 25% versus 21% in Q1 FY22, underscoring our decision to expand the ready-to-eat capacity from 5,000 metric tons per annum to 10,000 metric tons per annum at our Ragampeta processing plant. Our capacity utilization is also improving, but we still have the potential for much higher revenues from our existing facility. In terms of our financial performance, our total income was at 3,250 million, saw a growth of 42% year-on-year and 55% quarter-on-quarter, largely driven by volume growth and better realizations, mainly year-on-year. We would like to point out that the export benefits that were earlier reported as part of net revenue have been reclassified, regrouped under other income. This adjustment has been effected for the reported prior periods as well. That is Q1 FY22 and Q4 FY22 and the full year FY22. Further, the increase in export benefits, which stood at 137 million in Q1 FY23, is on account of almost approximately around rupees 5 to 6 crores of RODTEP benefit, the replacement scheme which came in the place of MEIS. The part which was accounted was only to the extent which was made available to us, with the scripts available to us during the quarter. And as we continue to, because there have been some technical issues also with regard to the benefit being made available from the websites of the government websites. So as they are made available, we would continue to account for those benefits under the income. Now coming to profitability, other expenses which were led by increased freight costs continue to pressurize the margins, but were partially offset by the improvement in our product mix. Our EBITDA for Q1 FY23 came in at rupees 347 million, a growth of 153% year-on-year, accounting for a margin of 10.7%. Most of our other costs were in line with business growth. We closed the quarter with a profit after tax of rupees 185 million, a growth of 464% year-on-year, as opposed to rupees 33 million in the previous year. With that, I conclude our opening remarks, and now I request the moderator to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and one to ask a question. The first question is from the line of Lokesh Maru from Nippon India Mutual Fund. Please go ahead.
Hi, sir. Am I audible?
Yes, please.
Sir, congratulations on the excellent set of numbers on volume front and realization front both. I wanted to basically touch upon our earlier, expectation of doing somewhere around 18,000 to 20,000 metric tons, right? Basis our increased capacity utilization up to 60% for the year. So given that we have done 3,700 in Q1, that leaves a lot of, burden of around 15,000 tons or so for the rest of the 3 quarters. And again, given that Q1 usually is heavy, so how would you like put the next 3 quarters and the sales and so on that way?
Yeah, Mr. Lokesh, the point what you are referring to was about capacity utilization with regard to production. And yes, we did mention that we were looking forward to doing a production of around 18,000 metric tons and plus. This is mainly about production. And in fact, our processed shrimp was 4,600 metric tons odd for the Q1, actually. And we were confident, of course, in the beginning of the year for sure on that basis. And as far as capacity utilization is concerned, it is more driven by the supply situation, even though we could have a strong backup of the order book diversified between various markets. So as far as Q1 is concerned, we did do a production of 4,600 metric tons, and it was we did pretty good. It is the highest production we have done, and we were definitely on that path of doing that 18,000 metric tons plus for the year. But as I had also mentioned in the opening remarks, it is also subject to supply conditions and the situation, how they keep changing. So definitely as the supply as it comes, we would definitely look forward to doing that production of 18,000 odd metric tons. But currently, of course, which we have also mentioned in our opening remarks, that there's been a little bit of issues in the supply side because of some premature distress harvests, and also because of the rains and some flooding which has happened over the past few weeks. So we are watching and carefully looking at how to look at how to do the production going forward based on the supply.
Sure, sir. Understood. And sir, how's the basically when you say supply, as of now, it is only in the current quarter that you are seeing some disruption on the supply side, right?
Yes.
Okay, so That's all from my side. Thank you.
Mr. Maru?
Yeah, he's done. Yes.
Thank you. The next question is from the line of Pritesh Gandhi from Discovery Capital. Please go ahead.
So just want to understand, given the high freight rates, are we able to pass those on to our customers?
Sorry, can you repeat that question?
I think given the high freight rates, I just wanted to understand the overall supply situation. Because we are seeing a whole host of your competitors also adding capacity. So how is the global demand supply situation right now in procession?
Okay. First question was, are we able to pass on the increased freight costs to the customers? That was your question. And we were able to do it till last year, of course. So that is when even the overall unit value also had increased in dollar terms. However, of course, then the market also has corrected accordingly based on the demand side overseas. And right now, the increased freight costs are already factored in the part of the sales. And as we also are looking forward, because we had our first set of reduction, which was, of course, very minuscule, or rather, very insignificant. We only had a reduction of hardly around $1,000 to $1,200 in the last 2 months, even though the increase was in multiples of thousands. So as, of course, there is also marginal reduction in the freight cost, which is not significant. But as we also look forward for further reduction in the freight costs, we believe there will be an easing of freight-related costs as such over the course of the current year. First, that is regarding the freight impact. And as far as the demand is concerned, there was, because of let us say disposable income increasing, or because of the various support given by various governments of the respective countries, of course the demand was also higher over the past year. And now the demand has been a little bit, correction has been there. Demand is still going in a consistent manner as such. Sales have been going good. It is just that the supply also from globally has increased overall. And the inventories have also been built up. And most of our customers, in fact, not all of them, but most of them have also been doing promotions on the retail side, especially at the supermarkets level. And we are positive that such promotions will only be they will play an active role in absorbing any additional inventories or supply which gets built up during the current year. So for now, the demand as such is overseas is consistent, and it has not really dropped. Of course, it's more to do with some extent of inventory pileup, which has been happening over the past 2 to 3 months, which were mostly delayed shipments of last year, which have all made it, and they are in fact increased their promotions too. So we are looking forward to the positive impact of such promotions over the next few months, especially going forward for the holiday sales which are required. The product will be required. Yeah.
Sorry, so are you seeing a slowdown in the demand as yet, or it isn't happening because of the promotions? And then is there in turn any pressure on pricing and margins and spreads overall?
Actually, on the demand side, there was a bit correction in the early part of this financial year. As I have just mentioned, that there was a certain extent of inventory pile up also, which had happened because of all last year's shipments reaching to the destinations because of various logistical issues which were there not just for our company but across the trade. And because of that, as the logistical issue eased out, a lot of pending shipments have made it to the destinations. So that means there was kind of more supply at the destination level, at the destination consuming end than the demand which was prevailing at that point. That is what seems like there's been a drop in demand, but it's very consistent. It's just that there has been accumulation of arrival of quite a large amount of product into the country compared to the normal situation. So that is what looks like the demand has kind of corrected a bit and it kind of subsided. But as such, our customers have reported that their sales are all going in a very consistent manner. And yes, of course, pricing corrections did happen already. And so for now, we are looking forward. We are, in fact, again, looking at filling our order book again for the holidays as the supply also improves on our side. Margins as such, when you say it just is not just dependent on our realization there overseas, but also our supply situation here. The cost of raw material also plays a role. So definitely we are looking forward for increase in supply also over the next 3 to 4 weeks. And we believe it will basically give us a good opportunity to continue our growth plans, which we had in the beginning of the year.
Got it. And given it is in food actually item, I'm assuming that even excess inventory ultimately will get corrected reasonably actually quickly, because either it'll have to be discounted or let disposed of, or how long is this shelf life of stuff?
It's a food item like you rightly said, and it is definitely not among the expensive items like snow crab or lobster tails, for example. We are definitely reasonably priced, and of course we are not that expensive for people to move away from and move towards hot dogs or something. So it is being the shrimp consumers continue to consume, and in fact the price increase which has happened like a year ago also was not so significant that it needs to be that it is a turn off. And that is the reason our customers have reported that as such, consumption-wise, sales-wise, the volumes, as far as volumes are concerned, they have been very consistent for them too, which is something good to hear. So definitely it is not very expensive, like I said, like snow crab or lobster tails. So they are reasonably priced. Shrimp is reasonably priced. And the consumers of shrimp, basically shrimp, being the favorite item among the seafood consumers, definitely will have its share of untampered, undisturbed market, and there's no disturbance to that. It will remain for sure consistent. It's just that when our customers also provide additional promotions, discounts, or offering additional portions or additional bags, they would definitely increase the volume growth, definitely.
All right.
And it will absorb.
Got it. So I'll just rejoin with you. I have some more, but I don't want to hold it up. Let me rejoin with you.
Thank you. The next question is from the line of Mayur Gathani from OHM Portfolio Equi Research Private Limited. Please go ahead.
Hi, sir. So when you're referring to supply side issues, what actually are you referring to? Are farmers not producing, or is it the inflation that is holding them to produce more?
Oh, no, actually, farmers did produce well. Unfortunately, because of some disease-related issues or whatever, they have done some premature harvests in the earlier parts of June, or rather, kind of around June and early part of July. which has a big, when the farmers harvest prematurely in the smaller sizes, it is always the same story goes where the medium and larger sizes of the future get wiped off from the market. And that was the major factor which was there. And also recently, the heavy rains which had caused certain flooding area on the coastal areas also did wash out some of the shrimp into the ocean. So it's not that they have stopped stocking. In fact, we are also, as you know, our company is involved even in the hatchery side. We do have seed sales happening. It's not very significant, like it is pretty much similar like how it happens at this time of the year. It is quite steady. So farmers are restocking. There are no issues on that front. There were issues with regard to some premature harvests in the smaller sizes. And now again, as the pricing also has improved, all the farmers are really also looking forward for stocking again. Those farmers who had to do maintenance or basically do a shutdown for some time to dry up their ponds, they are again now going for seed booking, which we are already getting the news from various hatcheries.
Okay. And your average realization has been way higher, compared to last year or a few years. So what is the reason behind that? Because you just mentioned that there was higher supply and because of, the container issues, there was higher supply in the last quarter or maybe in quarter 4. But what's the specific reason for this higher realization? Is it the value add?
No, okay, there are two factors mainly. Of course, value add, the ready-to-eat percentage, as it increases further, the more volumes we can do in ready-to-eat, definitely realization in dollar terms also increases. But one of the most important points for the Q4 and Q1 is also the rupee depreciation, which we cannot ignore, which has been almost like from 76 to 78, 79. That also helped us in gaining higher rupee realization. But mainly that for us, if we look at on a dollar realization part, it was more to do with the product mix, which as we increase more on the ready-to-eat products.
Okay. And the additional 5,000 ready-to-eat, the value add, will that come by last quarter of FY23?
Yes, that's what we were expecting it to be completed by Q2 end, but the logistical challenges which were there, they have delayed their shipments, and it's coming in Q3. Like you said, we will be completing. We will see the benefits of the expansion by the end of the current financial year. Correct. We will see the operational benefits of the ready-to-eat products capacity expansion more towards the end of the year, like you said rightly.
Yeah, so we will see the financial benefits in quarter 1, right, of the next year.
Yeah, more towards Q4. You can say precisely Q1. Yeah, Q1 is more. Yeah, correct.
Okay. And your outlook for the demand, etc., remains strong. The supply side issue more or less are kind of taken care of, so you should have a good next 9 months. Yeah,
as far as demand, as I had mentioned earlier also to the previous callers also, that demand-wise, it is quite steady. The main thing is supply. Supply not only helps us to utilize our capacities in a better manner and reduce our costs, operating costs. At the same time, they would also enable us to do more sales. So we are keeping a watch on the supply situation. Definitely. It's more to do with that at this point, because our order book is still there. Unfulfilled contracts are there. Good amount of contracts are there, and we are continuously monitoring the situation with our customers to ensure that our order book is in a good shape actually.
So quarter 1, what was the utilization level, sir?
The quarter 1 was 52% of the total. Approximately it was around 52%.
And ready to eat?
The ready-to-eat, 1 minute, please. Sorry, quarter one totally was 63%, I'm sorry. And in that, the ready-to-eat was, in that, of course, the ready-to-eat capacity, I think, 20%. Sorry, 23% in Q1 FY23. I'm sorry about that. It was 20% for FY22 for the full year, whereas it is 23% of the Q1 FY23. So, with regard to ready to eat.
So, out of the 5,000 capacity you have, you utilized only 23%.
Of the 5,000 tons, if you divide it by, means on an annualized basis, this is, so it is what's Q1, right? Yeah, so we have utilized 23% of that in the Q1. So, Q1. This is Q1 percentage, 23%. Q1 FY23, the ready-to-eat capacity processed shrimp was of 23% of the total volume of 4,600 metric tons.
And what can we look at? What this number can be? This can even achieve an 80-90% number on this, because you're again coming up with a new expansion next year. So on the existing capacities, can we achieve an 80-90%?
If you actually look at it, if we continue to do this, we are almost 85%. We are utilizing 85%. If we do it at the same run rate for the next quarters, we are already utilizing at 85%, and that is the reason which we had foreseen this based on the demand and our ability to utilize this capacity at a much faster pace. The decision was taken to add up that additional line of 5,000 metric tons. So if we see at the current run rate, it is 85%.
Fair, sir. Got it.
If we are able to do this for all the 4 quarters, of course, subject to supply situation, but order book-wise, there's no issue. We are very confident. That's the reason, based on the support of our customers and the feedback from them, we have decided to go for that additional capacity.
Okay, great. Thank you, sir, and all the very best.
Thank you. The next question is from the line of Shurit Deora from Paladin Capital Management LLP. Please go ahead.
Hi, good afternoon. I have some really quick basic questions because I'm not very familiar with your business. So firstly, you mentioned a few times that 3,700 odd tons was the sales volume, but 4,600 tons is another volume that you refer to, which is the production volume. What is the difference between the two?
No, sorry. We have mentioned that our sales volume was 3,760 metric tons during the quarter Q1. And of course, the processed shrimp, of course, whatever is the difference is getting, it will be in the inventories, and it gets shipped subsequently in the current Q2 and thereon, right? Okay. So we said our total processed during the Q1 was 4,611 metric tons, to be precise.
Okay, got it. This is just inventory and go on in the subsequent quarter.
Yeah, I mean, subsequently, naturally, we cannot, the sales will only recognize till the end of Q1 and June 30th, right? Subsequently, in the subsequent quarters, subsequent period, basically, it will get recognized.
Okay. My next question is that on the pricing, these prices that you mentioned, 780 odd rupees is the price for the basic shrimp, and I think 10-15% higher the price for the RTE product. These are FOB prices or CIF?
They are actually CIF. Which pricing? We have.
No, I mean, I'm extrapolating it. The 813 odd realization that you.
Oh, that is CIF, of course. It's our invoice based on our total volume of shipments for the total value against the total volume of shipments. That is the money which we have realized. It is including of 813 rupees includes freight also, if that is what you're asking.
Yeah, exactly.
It includes freight component also.
Okay, so my next question is that globally, it sounds like demand has come back post-COVID, but it also sounds like supply is coming back. I think there's a lot of inventory in the channels and a lot of materials reach the customers or warehouses. So in this situation, what is the impact on pricing of shrimp? So this $10 approximate number, how does this get impacted?
I mean, just going on an example, if a $10 per kilo item was there, there was also earlier it was at around $8.5, and it had this was like a year and a half ago, and then because of various challenges, product not reaching the destinations and the demand soaring, of course there was correction, and say it went up to almost $10. And now, again, there have been some corrections over the past few weeks, and right now it is corrected down to $8.5 to $9. So depending on the different products which we focus on and which we do. So the corrections keep happening on an ongoing basis depending on the demand-supply situation, which you are very much aware, like any other, agri or like aqua product as such. So currently, it has corrected from its high of last year for sure. The current market, it is definitely corrected by almost like $1 to $1.25 comparatively. I mean, taking on a $10 item base. I'm just giving you an example.
Right. So the impact of this reduction will be seen in the next quarter itself, or do you have contracts in place which guarantee certain realizations to you?
We do have contracts now. If you look at it, we will also be signing contracts in the lower values also, because it's an ongoing thing. We capture sales at the different stages of the market. It is not like we would be nobody would be buying their year's requirement at the market highs. We need to understand that situation, and nobody is going to at the same time sell at the year's low for an entire year. So it is an ongoing situation. We will also be taking contracts at the lower levels, and of course, since you are not aware, but I'm just telling you, based on the realization which we get, which includes the rupee position against the dollar. Based on the average realization, even our raw material prices keep correcting depending on the demand-supply situation and the realization component. The prices also keep changing at the supply side. Like for the Q1, also the supply prices were also quite low. They have corrected significantly low at that time during Q1. So they keep changing, so it's not like correction with a lower price is going to remain consistently for every quarter, but it keeps changing as the supply reduces and as the supply increases. So that is more of a market dynamic.
Okay, so you're saying that the pricing is dynamic. Is there a season? Is this Q2, Q3 will be peak season? So is it fair to say that the prices drop after that, or that's not the case?
Sorry, can you repeat that? I'm sorry, I didn't follow that.
Yeah, you're going into peak season for festive demand in the Western world, right? So would you see pricing drop off after the season ends?
To tell you the truth, the pricing has already dropped.
Okay, so this 10% or 15% drop you're talking about already reflecting that?
Yeah, which I explained to you. It went up from $8 to $10. Example, I gave you on that numbers on just to take on an example basis. It went up from $8 to $10, and it has again corrected and came down to $8.5 to $9. So that has already happened. So it's an ongoing thing, and we also coordinate and communicate well with our customers and ensure that we don't get affected, and we try to have a consistent margin maintenance. We do try, but there are times when it can be there will be headwinds as well as tailwinds. It is in our interest to make use of the opportunity during the tailwinds when they are in our favor.
Sure. And you mentioned the supply issue. There's some disease. Is this disease restricted to specific districts, or is it across large parts of the East Coast?
It was mostly some areas of the East Coast, not all. It's not all areas, but some areas, because we still have had successful producers, farmers who did harvest good sizes, large sizes actually, over the past 1.5 months. They're continuing to even now, whether it is in the state of Andhra Pradesh or Odisha, and also some in Gujarat. There are also been quite successful farmers. Not all areas are impacted. Definitely some areas are impacted, which will have its effect on the overall supply situation.
So would you be able to procure enough material from other areas or from other farmers to hit your demand, to hit your order books? Because it sounds like demand is strong.
So we have been procuring our supply from other states also over the past 3 weeks, 4 weeks, for certain prices which are not available locally, or they are a little bit tight in supply. We are procuring from other areas too. So we are ensuring that our orders are getting shipped, to be precise.
So it doesn't sound like then you will have an issue with meeting the demand.
Though the issue will be on, if any, will be on margin contraction, for example, because when there is if there is a shortage of supply during certain times of the year, naturally the pricing at the farm gate level will also be increasing a little bit accordingly. So it's as I said, it is dynamic, both on sales front as well as on the sourcing side, on the supply side. And of course they move in tandem, even if there is a little bit of time gap, but they move in tandem, and ultimately it is dependent totally on our realizations overseas, which will determine what the supply price has to be.
Okay. And may I ask one more, the last question, the bookkeeping question. I'm a little confused by the RODTEP statement. Does this quarter's run rate, or does this quarter's figure include anything that's spilled over from the previous quarter?
Actually, the main, with regard to the RODTEP, we have only considered to the extent of scripts made available to us. Since for the past 1 year, actually a little over 1 year, we have been having issues with regard to the application process and with the government's website, the DGFT, the Director General Foreign Trade website. And so they have only considered to the extent of benefit available, made the scripts available to us. Only thing, of course, the new set of statutory auditors have decided to regroup it and reclassify, which is part and parcel of the auditing process. They have decided to regroup it under the other income group rather than the operating income. That was the only change, but we have only considered to the extent which is made available to us. We will definitely consider as we continue to realize more of it over the next, as it is made available to us over the next Q2, Q3 also, we will definitely recognize. And only some extent of our last year's RODTEP has been considered. There is still more, which will be coming over in the next few quarters as it is made available to us.
But the run rate should be about 4% of net revenue,
right? Around, yes. Yes, correct.
Okay.
That is correct.
So if anything that's beyond that is either from some other source, it's either rolled over or some other source.
Yeah, that is correct. That is correct.
Okay, thank you so much.
Thank you.
Thank you. The next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Yeah, thank you for the opportunity. Sir, your other expenses have shot up significantly in the Q1. So is it mainly due to the freight expenses?
Yes. And the other expenses, it is mainly due to the freight expenses. The freight costs alone are actually, they will, just a minute, please. The freight costs alone have actually, for the Q1, it was almost to the extent of 25.33 crores. Vis-a-vis Q4 was 14.5 crores. and Q1 of last year it was 11.4 crores. So if you see, it's more than double of Q1 FY22. So this quarter alone, in the other expenses, the major component is freight. It has always been the ocean freight expenses. It's the other expense, export-related expenses. Correct.
So, sir, in the current quarter, how these expenses are panning out? Can we expect some material reduction, or more or less it should be continued?
I have mentioned to the previous callers with regard to the ocean freight expenses, we did find some marginal reduction, but it is not significant. For example, compared to last year, if there was a hike of almost around $4,000 per equipment, we have had a reduction of only $1,000 during the quarter of Q1. And I mean, we will see the impact of that more towards Q2. But it is very marginal, as I have mentioned. So when the increase is at a higher rate, the reduction was at a lower rate. And hopefully the freight costs, as equipment ease out and as vessel frequency changes over the next quarter, Q2, Q3, Q4, we are sure that they will also be reducing the freights, and we can also reduce our costs accordingly.
Okay. And sir, your realization have already dropped, and due to supply issues, your procurement cost will also be high in the current quarter. Plus, the reduction in freight is also marginal. So that means Q2 the margins can further go down from the current level. Am I correct in saying that?
It depends. If our realizations have dropped and our supply prices have marginally increased, and of course, as our realizations also improve, or as the supply increases, supply side, so farm gate prices also reduce from the recent increase, we will be able to balance them out. But there will be some effect on the margins, which we can't really say at this point. But we are expecting, while we will not be able to put a number precisely at this point, because there are other factors also which are changing. So we may see some reduction more towards the end of Q2, or so it depends. We need to see how the supply, because we are only in the middle of Q2, and there's still another 45 days. Supply also is changing, so we will be seeing, and our sales price also is marginally increasing. It is very insignificant, marginally. So it's so we can't really completely put a number to that at this point, actually.
Okay. And sir, for the whole year FY23, given the current quarter volumes and the current situation, what can be the realistic volume numbers that you can say on a conservative basis?
See, in the beginning of the year, we were looking at anything between 18,000 metric tons plus 18,000 plus metric tons for the, and around between 18 to 20,000. That's what we were expecting for the full year, and we did definitely go as far as production capacity was concerned, and we did definitely do our best, and we were able to do the highest volume, at least in Q1 of FY23, for sure. As far as our lifetime high quarter is concerned, we did do good. But of course, as things keep changing, and being a livestock, Q2, little bit of supply issues, we expect things to be again changing and improving, because it is a continuous cycle. Farming cycles are continuous. So we are we may be looking at some corrections, and maybe between 16 to 18,000 metric tons is what we are. We can't really say at this point. As I said, we still have another 45 days. We are looking forward to see how well we can do in the current quarter as well as Q3. Historically, Q2 is always the highest for us over the past years, but maybe this year Q2 may not be that much as far as volumes are concerned, and as Q1 itself has taken the major part, we expected Q2 to be on similar lines in the beginning of the year, but because of the changes in the market supply side, we see that effect, and we are looking forward, of course, for a better Q3 too, because farmers are again stocking the seed again, and also, of course, some of them they have been consistently growing their shrimp in their pond. So we would see we expect improvement in the supply situation more towards the end of this month, August end and September and onwards. So we look forward for that supply improvement.
Okay. And one last question, sir. These RODTP incentives, are these linked to the revenue numbers or the volume numbers? Can you just explain that?
It's a good question. It is actually, there is a cap. Basically, it is not entirely based on the revenue number, because there is also a cap of per kilo for both the schemes. I mean, on the RODTP, precisely, it is 22.2% approximately coming up on FOB value.
Okay, around 22% of FOB value.
2.2%, sorry. 2.2%.
2.2%. Okay, sir. That is from my side. Thank you very much.
Thank you. The next question is from the line of Dipesh Kashyap from Equirus Securities. Please go ahead.
Yeah, hi Chaudhary sir. Thanks for taking my questions. Sir, you talked about the supply issues and also the farmers redoing the crop. So I just want your thoughts on how the second crop is looking like, because I think the first crop was very good, what we understand, and the second crop has faced some challenges due to the unseasonal, you can say, rain. But now what we are hearing is that the farmers are again putting the second crop. So what is how the year is looking like? That the second crop will be again as good as the first crop or not?
Well, we expect it to be good, because that is how companies like ours and everybody else make their plans and also plan with their customers. We expect, we see a lot of farmers again stocking again, like you rightly said. And since we are also, as I mentioned to one of the earlier callers, since we are also into the hatchery business, we see that the seed booking is happening in a good manner. A lot of farmers are again going for stocking. Also, thanks to some improvement and increase in the pricing, which they feel, it's good for them. So we definitely expect second crop. But there is one issue here which you know very well, as you know about the industry. Usually the second crop has its little bit of challenges, because as the colder temperature starts kicking in, colder weather starts kicking in, it does have an impact on the growth. So typically 90 days crop ends up becoming a 120, 125, sometimes 130 days crop, which you know on the supply side how it is. So we are definitely watching, and but as I also mentioned to the other callers, we are also not just restricting our sourcing only to a few areas, and not like always, not just to the state of Andhra Pradesh. We did definitely source from other states, irrelevant of from where it is, but we did source well from other states too, in a consistent manner actually.
Yeah, so that's what I want to understand, because India exports 6.5 lakh tons and we are exporting just 12,000 tons, and now we are reducing our target from 18,000 to 16,000. So can't we get the supply from the neighboring cities or whatever, because India is actually producing that much, right? So we can just supply should not be a constraint at such a small market share.
We have not specifically, we have not reduced. Since the earlier caller, the previous caller before you had specifically asked what exactly are we looking forward to, I have mentioned maybe we are still looking forward for 18 to 20,000 metric tons, but on the production side, but it is difficult to make up. Example, if we have a significant drop in one quarter, it is difficult to make it up in the other quarters. As you know, our industry, the summer crop is the highest, right, as far as the production is concerned.
Correct.
Most of the shrimp production in India is produced between the months of April to August, as typically that is the summer crop. That is the resultant of the summer crop, where the highest amount of production happens. So while we see a little bit of gap in supply, we have just been, since he has asked me on a conservative basis, I have just put a number to it, but we are still looking forward to increase, and do that minimum of 18,000 to 20,000 metric tons, so that it not only shows that we are utilizing our capacity in a better manner, but in a good manner, but also it also improves our overall business numbers, revenue numbers, as well as volume numbers, and our market share also increasing. So we are looking forward, but we know the situation, and that's why we are telling.
Got it, sir. Got it. So secondly, on the working capital side, like we have having a stretched working capital for the last 2 years, and part of the reason was that the container availability was low, and it was turnaround time was very high, so our receivable days were high. So now, as we are progressing, are the working capital days coming down, or still we are at like 120, 130 days?
No, it is coming down actually. It is coming down as working capital days are decreasing in the current year onwards, quarter onwards. Actually, Q1 also it has dropped, and it is continuing to do that because we are also looking forward for a lesser period under inventory. Firstly, because we are able to kick out most of the product out, ship them out, because of we don't have any issues which we had last year with regard to equipment or containers. We don't have those issues anymore. So now we are able to push the orders much sooner compared to last year and the year before that. Definitely that is going to reduce our inventory days, and as well our customers also have been making faster payments, and thereby our debtor days also has been reducing, and our feed sales is mostly being done. More than 90-95% of that is being done on cash and carry basis, where basically no terms are being extended. I mean, even though that is an insignificant part in the total business of ours, but multiple factors which have impacted our overall working capital days, they have all seen an improvement.
Good to know, sir. Good to know. So lastly, on the RODTV benefit, I think you have talked a lot on that, but I just want to understand that will the number be kind of consistent now? So is the government releasing the scripts like on a frequent basis, or it remain volatile, because it is a very important part of your margin profile, right? So if it goes down in any particular quarter, your margins can just like wipe off during that quarter. So just want to understand that whether government is like releasing the script now on consistent basis.
They are, but there is also a delay to a certain extent. I'll be very precise since you asked me that question. There is some delay, but in our case, as you know, our company's case, last year we didn't factor in significant parts, so that is all getting spilled over into this. So I'm pretty sure that delay may not really be noticeable in our, I think so, that we think that it may not be noticeable in our recognition because we already have pending of last year's, to be precise. So there is some delay by almost like around 90 to 100, 110 days minimum. There is a delay. That's an average. Usually it is there around 120, 140 days will be there always, as you know, like any government scheme typically. But that is being, it is at least remaining consistent. It is not like those earlier days of last year and the year before that, where for almost more than 7 months, 8 months, it was a lot of uncertainty, which is at least it is not that bad. So we will most likely be having a consistent run rate on that part as such.
Great, sir. Great. So after 3-4 years, things are looking up for the sector and the company. So wish you all the best, and thank you.
Thank you.
Thank you. The next question is from the line of Nitin Awasthi from InCred Equity Wealth. Please go ahead.
Hello, sir. Most of my questions are answered. All I want to ask is a more longer-term picture. So recently, a competitor of yours from Vietnam, Minfu, has tied up with a cell multiplication shrimp company from Singapore. So they're going to get that cell meat. So first there was vegetarian, non-veg which came into play. Now there's cell multiplication non-veg which is coming into play. And Minfu has tied up with them. Minfu is a giant in the space. So you expect some troubles from there? Any thoughts of yours on this development?
Mr. Nitin, I do not believe that animal protein will ever be replaced by plant protein, if that is what your question is specifically. Animal protein, I do not think will be completely replaced, and as such, as long as it is lean and healthy, like in our case, with regard to our product which we produce, we are not steak producers or anything or any other products where where the meat is. So our protein is a lean protein, and our product is still the number one consumed sought after item in the seafood sector, and we believe the demand will continue to be remaining consistent, and it will grow, even though it may be at a depending on the promotions and other promotional activities conducted by our customers like food service, restaurants, and retail segments. But with regard to that question, whether any sort of cell-based culture growth or any plant-based protein increasing, we don't really believe that is going to have much impact. And of course, as such, our country is now more focused on increasing its volume, and also even the government has set now they are setting targets even for individual states and companies. Of course, now they are also focused on that. The central government is also focused on improvising the production and at least maintaining consistent production at the farm level. So as long as that is there, as long as we are able to produce the product in a cost-effective manner, not just at the processing level, but even our primary producers at the farm level, we definitely believe we have our space which will not be impacted. Our industry space, our shrimp, our space in the shrimp market as such, and our company's space also.
Good to hear, sir. Thank you, sir. That was all my questions.
Thank you. The next question is from the line of Vincent Andrews from Geojet Financial Services Limited. Please go ahead.
Hi, good afternoon. Am I audible?
Yes, please.
Sir, good afternoon and thanks for the opportunity. As most of the questions have been answered, only one question I have. Can you please clearly mention what was the average realization in dollar terms in Q1? You mentioned around $10. Was it for Q1?
No, we never mentioned it as $10. Sorry, one of our callers was asking just to give on a approximate number. They just asked about the corrections, but it is precisely the average realization for the quarter was $10.44. Compared to last year, full year, it was $9.81, FY22. Average. This is average for all products included, ready to cook as well as ready to eat.
Okay. And how much it is currently in dollar?
As I have mentioned, it has corrected a little bit. So average means right now we are still doing shipments of around $10. So it's a changing thing. So this is Q1, what I have given you at $10.44. Maybe Q2, it could be changing a little bit to $10 or $10.10, example. So we can't really say at this point, but we'll have a more as we do our volumes and as we complete our order book, we will have a better idea on that.
I asked if you have only billed for these 2 months, July and August, how much it was?
It has basically, I don't think we'll be able to say that, but approximately, let us say it is around $9.9 to $10. 9.9. I think that is the reason we have mentioned approximately earlier. So around $9.8, $10 in that level.
Okay. And just for a confirmation, like you mentioned, it is the average realization in rupee terms 813. It is FOB plus freight. So this $10 you mentioned, it is inclusive of this freight or separate from that?
It is inclusive of the freight.
So if I can ask, how much if suppose we assume the freight cost will normalize in the second half. So how much out of this $10.4, how much it will be for reimbursement for the freight expense?
And that depends totally on how much of price reduction will be there. We can't really say that. Like I have mentioned to you, compared to last year on an average, we are paying around $4,000 more in the beginning of the year, and now it has hardly reduced by $1,000, but still it is higher compared to what we were paying at the during the pre-pandemic stage. So that way, it depends on how much the reduction will be, number one. Number two, what you need to understand is the increase in freight cost is also eating up our margin. So if at all freight costs reduce, we can also at least look at some margin improvement overall. So we are just, so in that, currently I don't know how much reduction would be, we don't know yet at this point how much reduction would be there on the freight cost. But to tell you on that part, maybe it will be around 15 cents per kilo maximum. We don't expect more than, if at all it is there, but we are not sure of that because it is not in our hands. It is based on the shipping lines decision.
Okay, I understood. That's from my end. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question that the management could answer. I would now like to hand the conference over to the management for closing comments.
Yeah. Thank you. Thank you once again to everybody. We also thank Stellar IR advisors, our investor relationship advisors. For any queries and any clarifications regarding the Q1 results and also any specific updates, you may always reach out to Stellar IR advisors or the company at ir@apexfrozenfoods.com. Thank you and have a good rest of the day. Bye-bye.
Thank you. On behalf of Apex Frozen Foods Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your